is what we're looking at today, bringing the future here for an exchange that is already forward-looking. If you look at the recent transformation and a lot of events within the Nigerian Exchange Group, of which the Nigerian Exchange Limited belongs. I am Bosun Omofaye. I'm a TV journalist and I work for Arise Television here in Lagos, Nigeria. I also online at Frontier Africa Reports. Thank you everyone, our panelists and all the distinguished guests who are participating on this, as well as participants who are logging in from Nigeria, around Africa and around the world. We have about 2.5 hours scheduled for this particular very interesting event. We have a few presentations, then of course 2 bespoke panels that will take a very important look at some of the key issues to be discussed. The new horizon of opportunities has been opened by the Nigerian Exchange Limited. So bringing the world of technology on the platform and how the markets can all be married together to give us a better future, provide the opportunities for investors and other stakeholders within the Nigerian Exchange Limited and beyond into Frontier Africa is what this particular event is opportunity. So listen in everyone and be very attentive, participate as well. You can use the chat box to send in your comments, and you can direct your questions if you use the Q&A button to ask questions of any of the speakers, including the panelists, as the 2 panels will come one after the order. Of course, I'm going to yield the floor very quickly to keep this to business to Timi Pupola, who is the Chief Executive Officer of the Nigerian Exchange Limited, to give us a warm welcome and open this webinar conference on behalf of the Nigerian Exchange Limited on Technovation. Timi Pupola, you have the floor and our attention.
Thank you very much, Bosun. And the DG, distinguished ladies and gentlemen, it is my pleasure to welcome you all to the inaugural Technovation Conference brought to you by Nigerian Exchange Limited. The theme of today's conference has been carefully chosen to reflect the proliferation of innovative products and services driven by technology across many industries in Nigeria. We have brought together industry veterans that will dimension critical aspects of the evolving technology landscape, including market infrastructure, emerging markets, partnerships, business models, innovation, data, and of course, regulation. The conference is particularly important to us at NGX because we have stepped into an era that signals a new horizon of opportunities around growth, expansion, and shared prosperity for our markets, our stakeholders, and the larger economy, both at the national and regional levels. NGX is a technology powerhouse that leverages smart business models to deliver vertical platforms across capital formation, investments, capacity building, market development, and a plethora of other services within the capital markets ecosystem. If you view the exchange across the 3 verticals of digitization, digitalization, and digital transformation, you will find that the exchange has been a strong consumer of technology. And indeed, the exchange has pioneered many solutions, not just to optimize our internal efficiency, but to improve on our value delivery to our customers. You will likely be aware that there has been no physical trading on the floor of the exchange for over 18 months, with all trading being done remotely and with no recorded downtime in that period. This is a testament to our digitization efforts. And as you will come to see during this event, we have pioneered many frontline capital market solutions through technology. As we look to the future to build on our rich heritage as the first and foremost multi-asset securities exchange in Nigeria, championing Africa's sustainable growth and prosperity, there are 3 core themes that will define our plans around technology going forward. The first is a digital transformation journey that should make it easier for investors, particularly retail investors, to access products on the exchange. Specifically, we are keen to democratize finance in Nigeria by leveraging current advancements in technology and relying on strategic partnerships. We will be doing this in followership with our apex regulator, the Securities and Exchange Commission. The second is a clear plan to use the exchange as a platform to accelerate the innovation we have in tech and ICT in Nigeria. We are committed to making the exchange an avenue for capital formation for technology companies to raise capital, and for those who are invested to find liquidity for their investments. We are convinced that the driver of the next phase of Nigeria's economic growth is through technology, and we are committed as an exchange to helping drive that growth and creating wealth for Nigerians, not just through capital formation, but by accentuating advocacy efforts that support the entire ecosystem. Thirdly, the exchange will continue to develop innovative solutions that drive not just internal efficiency at the exchange, but that support wider efforts by various stakeholders at ensuring a full digitalization of the Nigerian capital markets. We are extending our platform competencies in line with our strategic aspirations while leveraging best-in-class digital innovation to deliver value to our stakeholders and markets. Today's event is the first in a series of engagements that we'll be having, and we hope that these events will serve as a platform for synthesizing ideas towards execution. Finally, let me thank the DG and all of our speakers and panelists for your generosity and time and for accepting to be a part of today's events. We look forward very much to your insights, and we look forward to a rich discourse during the course of this event. Thank you very much. Boasim, over to you.
Yes, thank you very much, Temi Pukwala, the Chief Executive Officer at the Nigerian Exchange Limited, raising the curtain on what is going to be an interesting, a very impressive and knowledge-sharing conference today, this webinar we organized by the Nigerian Exchange Limited, and a curtain raiser, as Temi Pukwala says, for a number of other such to come, bringing technology, digitization to the platform that the Nigerian Exchange provide for investors here and around the world. Thank you very much, and we thank our participants and speakers and other panelists and other moderators for those panels who are standing by. Thank you very much. I can see a number of you in the room. But as been mentioned, Lamido Yuguda is the Director General of the Securities and Exchange Commission here in Nigeria. And of course, the SEC itself had been forward-looking in terms of technology and raising the game as a regulator in the market with a number of exchanges. And of course, the Nigerian Exchange Limited at the forefront of that. We have the pleasure of listening to you now for your goodwill message. The Director General of the SEC, Lamido Yuguda.
Good morning, distinguished ladies and gentlemen. I wish to adopt the already established protocols. It gives me great pleasure to deliver this goodwill message at this inaugural Ngx Tech Convention. May I begin by commending Mr. Temi Pukwala, the Chief Executive Officer of Ngx, and his team for putting this event together. Events like this show our resilience as a people and our ability to confront challenges. I also commend the Ngx for its effort at strengthening its competitiveness through the establishment of the Nigerian Exchange Group, Ngx PLC, thereby joining the Global League of Demutualized Exchanges. Your theme for this year's conference, Technology, Platforms, and Markets, indeed captures the mood in the world today, and the inevitable coming together of the three segments, especially in view of the COVID-19 pandemic, which has forced us all to stretch possibilities and adapt new ways of performing our regular and day-to-day activities. Digitalization and technology-enabled business models have enabled a market restructuring with financial services provision moving from solely the domain of banks and other financial service providers into the domain of non-conventional actors. This shift clearly poses a challenge and a huge opportunity to both financial sector regulators and conventional financial service providers like the Ngx. The shift challenges operators to upskill and restructure their business models in order to remain relevant while opening up new product channels and offerings that were non-existent a few years ago. For regulators globally, keeping up with the rapid pace of change in technology-led markets is challenging. And the rapid pace of innovation has also challenged existing regulatory frameworks, approaches, and tools. As fintech spans both finance and technology sectors, there is additional uncertainty around whether and how to regulate these firms. However, regulators have responded with their innovation initiatives to ensure that fintech strengthens their regulatory policy objectives and mitigates potential negative impacts. The Commission, like other regulators around the world, is prepared to advance with this evolving pace. It has put mechanisms in place to understand these new innovations, build the required capacity, and has deployed strategies to address them. The Commission's innovation objective, which is hinged on investor protection, market deepening, and providing solutions to existing problems, will guide market regulations and aid its interaction with investors seeking legitimacy and relevance. Indeed, a number of new rules issued by the Commission attest to its positive stance towards innovation. We have in recent times noticed collaborations between capital market operators, CMOs, and fintech companies, and the attempt by self-regulatory organizations like the Ngx to propose governance criteria to guide such collaborations. It is therefore pertinent to emphasize the huge responsibility on Ngx and its members to ensure that things are done within the confines of extant regulations. We must strike the right balance between innovation, market integrity, and protection of investors, without whom there will be no markets. For the technology enthusiasts and promoters, it is essential to understand the workings of the capital market, as this will enhance your ability to make relevant input and collaborate in an efficient manner. May I use this medium to enjoin innovators to promote safe and viable technology-enabled products and services that will ultimately increase market depth and access. The Commission on its part will continue to enable a level playing field by encouraging innovations that introduce efficiency into the market, advance financial inclusion and market deepening, and create positive impact in the Nigerian capital market. I thank you once again for this opportunity and wish you fruitful engagements and deliberations while keenly awaiting the valuable recommendations that will emerge from this event. Thank you very much.
Thank you very much, the Director General of the Securities and Exchange Commission of Nigeria. Lamido Yuguda, I'm just enthused by your presentation because you brought out two key points. First, that those who are in the technology space should know the market, and second, integrity is the watchword. Thank you very much. We appreciate those opening curve, and we hope that within the affordable time that you have, you'll be able to be part of some of the comments that are coming through, because I'm sure a lot of the big names within the industry will ask you a few questions. So as much as you're in and taking tea or coffee and you're attending to other official matters, please keep your connection in, Director General, for us to continue to benefit from some of the things you're doing and engage in the fintech community. But very important, the Nigerian Exchange Limited has raised this curtain and bringing everybody together to the table today at this very important time. Thank you so much once again, Director General at the SEC, Lamido Yuguda. Thank you very much. We appreciate that. And some of the big names that are here this morning to be part of this conference is Dr. Sheikh, who wears so many caps. I called him the fintech ambassador for Africa, for Frontier Africa. He is the one-time the founder of Nigeria's FinTech Nigeria, and also the current president and chairman of the Africa FinTech Network. Is here with a very big insight into the fintech community, of which he currently superintends with the rest of his team at the FinTech Nigeria. Thank you very much for coming to Dr. Sheikh. But very quickly, let's listen to a keynote address by Olubenga Agbola, who is the founder of Flutter. Flutter has millions of dollars in his back pocket, and if there's any man I want to meet anytime soon, that is the man who's making a lot of waves across Africa, not just in Nigeria, when it comes to fintech. Let's listen to Olubenga as he gives us a keynote address, which the future is digital. For those of us who are close to Generation X, we are somewhere there in between. We would like to listen to you. Olubenga Agbola, the CEO and co-founder at Flutter. You have the floor.
Good morning, everyone. Thank you so much for the opportunity to be here to be here today. Great to be here to present this address. I'll be sharing my screen in a moment to just basically, illustrate some of what we're trying to show. My name is Benga Gola. I'm CEO of Flutter. I will be just diving in right now to speak about what I call the future of payment, which is digital, right? The future itself is digital. As of today, right, in the world, I would say we're in the era of we're in the information age, basically, where technology is leapfrogging every business model, every infrastructure that we could think about, right? And with that information, with that assumption, with that fact, we're seeing growth happening across the landscape in multiple terrains. We're seeing infrastructure basically being leapfrogged across board. I'm trying to share my screen in a moment. Okay, so I see growth, being leapfrogged from every spectrum of our endeavor as, people in this age. COVID has obviously played a very big part in ensuring that infrastructure is going digital and everything is happening at a very interesting rate. As we all know, mobile phone, has been a big part of this in Africa, and obviously tech players have emerged across the board, from InterSwitch to Piggyverse to Bamboo to Pesapal to, of course, Flutterwave. We're seeing this massively, impacting the penetration of services across board. Then when it comes to regulators, we're seeing things happening. For example, in Kenya, a startup bill was created in 2020, which is creating incentives for startups and for IP protection across board. We're seeing also in Tunisia in 2018, where a startup bill was also launched to streamline legal processes and also ensure that there is better access to funding for tech companies across board. And this is very interesting, right? In 2021 alone, in H1, African startups raised over $1 billion in funding, which has obviously never happened before. This is really unprecedented in the history of infrastructure funding for tech players who are building new services leveraging on the existing infrastructure across board. Right. One of what we've seen as Flutterwave to drive that is basically building what I call Africa's largest payment infrastructure. And the goal there beyond that is really making it easy for, which is what would be my keynote point, is funders and regulators basically needs to, are the biggest stakeholders, in my opinion, to drive digitization across Africa and Nigeria specifically. We're seeing a bunch of changes happening across board, with COVID leading that forefront. We're seeing infrastructure growth. We're seeing companies scaling across board. The future we're looking for as a tech company is when small companies who are not 4, 5, 10 years old can list on the exchange, where companies like Nigerian companies can be globally recognized enough to show that we are basically going to provide the next level of services that can leapfrog Nigeria and Africa at large. We're seeing infrastructure plays. For example, the current fintech crop in Nigeria that we've seen, the way we've seen so far, has been linked to the fact that in the last 5 years, over 10 fintechs have been licensed by the Nigerian Central Bank, for example. That's an example of the role regulators are playing to enable and scale, fintech companies and create an enabling environment for startups. Another example that we've seen there as well is the ability for companies to be able to merge what I call the 3 pillars that can make Africa to live for, which is payment, commerce, and logistics, right? We've seen e-commerce going massive with Jumia in Nigeria and across Africa. We're seeing payment also getting bigger with fintech scaling across the continent. The last frontier is logistics, in my opinion, where if you can build an amazing infrastructure of logistics across the country today or across Africa, there will be a massive impact when it comes to delivery, which will automatically impact commerce and also impact payments. A lot of people today say, what, Amazon is doing pretty well. Amazon can deliver to you in 5 seconds or in 30 minutes, depending on where you live in the US. That's possible because of the infrastructure that has been built by the UPS of this world, the USPS of this world. And I think basically we can leapfrog across Nigeria and across Africa by ensuring that those three basic infrastructures are available. Obviously, all of these things are there because the telco infrastructure has been built, and that's also that's been leapfrogged. We've seen everybody in Nigeria having a mobile phone, and those mobile phones work and they have access to data compared to 2001 or before then when there wasn't that infrastructure. But we've seen how that has played out over the years and creating opportunity for companies like us to exist. We would not exist today, for example, there was no telco infrastructure in Nigeria or in Africa where we can build our services on. We are all internet companies. Basically, we build services that people can consume over the internet. And that is only possible because there's infrastructure that made that available. Now we've seen the backdrop of that, which we are called a new infrastructure. So when payment is established, when commerce is scaling, and we now have logistics, it will build a new era of companies who can leapfrog to be, global Nigeria ambassadors everywhere in the world, right? We've seen how the internet enabled the iPhone enabled apps enabled products, and that value chain continues to build because there is that telco infrastructure, then there is the enabling environment for regulators, then there is iPhone, then there are the Android, then there are apps, and basically all of this plays a major role in creating the future of digital across board. Today on NASDAQ and NYSE, the top capitalized companies are tech companies, right? That is also that's an indication of the future for us as well in Nigeria and across Africa. So basically, tech companies are here to stay. Tech companies they hold a major interesting leverage when it comes to distribution because you can distribute quicker and faster than most people have. Tech companies do not have infrastructure garbage, or they don't have infrastructure legacy challenges. And that's alone. The inexperience of tech companies is also what is helping us to forge on, without any, in my opinion, any fear for the future, and helping us to think about how do we leapfrog and scale? How do we build access to more infrastructure? How do we allow, a Nigerian living in the US to invest in the New York Stock Exchange? How do we allow, companies, who are just starting to raise capital from Nigerian Stock Exchange? How do we scale that? How do we list? All of those things are what I believe will help to scale the future of, the Nigerian payment system, the Nigerian fintech infrastructure, as well as Africa's startup ecosystem at large. And for me, the biggest drivers are the founders and regulators. Thank you very much.
A big thank you to Olubenga Agbola, who is the CEO and co-founder of Flutter. Thank you very much for raising very important points in your presentation. Digitization, the future is definitely digital, the payment, logistics, the hunger in the stomach of the fintech operators to go to a future that is unknown and take the rest of the existing global space with you. But very important point you raised about the founders and the regulators within the ecosystem to go for more collaboration and work together for a better future that we're all working on. Very important, I'm sure the Nigerian Exchange Limited is taking notes about your point about how to get small fintech startups to list on the Nigerian Exchange Limited. I'm sure Temeko Kola will welcome hundreds and thousands of you as soon as is possible. The doors are open, by the way, digitally speaking, to do all your listings. So I'm sure that will be part of the conversation that we'll be discussing here today. We'll have a few notes on that. But let's move on. Thank you so much, Olubenga Agbola. We appreciate your contributions. Let's get one big name within the fintech space to make his address, and that is Dr. Olusegun Aina, who is the president of the Africa Fintech Network, the founder and the first president of the Nigeria Fintech Nigeria space. Is too well known. He had a very rich background in the banking sector for many, many years and decades, and now he's the ambassador, that's what I call him, for fintech in Nigeria and across Africa. Dr. Segun, I know you have the floor. Let's share with you your views regarding the future of fintech.
Thank you very much, Basim. And it's a pleasure for me to be here today at this conference. And I want to commend the NGS group for putting this together. It shows a continued commitments towards, looking at digital initiatives that can, reposition and improve the Nigerian capital market and ensure leadership position, not only in Africa, but even across the world. So I congratulate everyone that have been involved in this. And I want to acknowledge the contributions of the Ngx group to the FinTech Association of Nigeria, of which they were one of the early members of that association, and they continue to contribute, and we leverage on their membership to also do a few things to support the growth of the Nigerian capital market. The previous speakers, the MD, Tempopola, SEC, DG, and also, of course, the GB have set the pace in terms of what I'm supposed to speak about, which is the future is here. I agree that the future is digital, but that future is really here today. If you look at the development, what are those things that have set the pace? The basis for what we're having today is the internet and, of course, telecoms. And within the last 20 years, we've seen the impact that telecom industry have played, and it's very noteworthy that two of the leading telecom companies are now quoted on the stock exchange. But the most important thing I want to say here today is that as at maybe March 2020, issue of digital transformation were not really taken as urgent, in boardrooms. Nobody really thought about it. Yeah, we talked about it, but something that we are planning for the next 10 years. That was at March 2020, before COVID. So one of the greatest things that COVID has done for us was to fast track and fast forward digital transformation in various organizations across the world, every industry, every sector. So what we are having today in the world generally is something that were planned to happen maybe in 2030 or thereabout, because there was no sense of urgency in terms of the amount of money that is being spent today on digital. So that future that we were talking about, 2 years ago, talking about something like 10 years, is now here today. So that is something that is important for us to note, and we have seen the impact that is made on businesses, particularly those businesses that were digitally ready before COVID-19. And I'm supposed to give a few examples. For instance, the stock exchange, for instance, now with the demutualized stock exchange, we now have a lot of opportunity and scope to focus on some of the things that digital can do for you. For instance, for the NGS regulations, there are companies that are into regulatory technology that ensures proper reporting and compliance, more efficient reporting, more up-to-date reporting, and stuff like that. Even superficial technology, all those players are now in the marketplace. Even though payments were, the most common in the fintech space and in technology, but we're now seeing a lot of new players that are focusing on wealth technology, on capital market technologies, and also superficial technology, which has been brought forward because of what has happened in the last 18 months or so. Talk about education, for instance. We have seen the future that we thought would not happen in terms of virtual online schooling, MOOCs, MOOCs, massive online courses. People are now doing this massively, sitting in the comfort of their rooms and getting certified, and then improving the knowledge base, which is also helping companies. These are things that would never have been imagined, 2 years ago. Or do you want to talk about medicine, in medical field, health, and so on and so forth? Some of the things that are having video consultation, telemedicine, and stuff like that. And of course, in the financial service world, the usual partnership is now key among banks, among capital market players with fintechs. 2 years ago, fintechs were seen as those small boys, who are just in the marketplace, but fintech are now seen as serious partners, even competing with banks. A lot of the fintechs are now even valued more than a lot of fintechs that are less than 10 years old are now valued more than some of the biggest and oldest banks in Nigeria. So we have seen all these things happen because the fintechs were properly positioned to be able to offer their services because of the challenges that COVID has given them. We have seen the tremendous growth that are happening within the fintech space. Whereas in the banking world, the number of banks, only banks that were digitally ready, were able to leverage on those challenges and made good money in 2020, while many others, had diminished returns. In terms of operational efficiency, we have seen today, compared to what has happened in the past, virtual meetings have become, the norm. 2 years ago, we wanted to do a conference like this, and you say it was going to be virtual. People would, in fact, even when NGA would not even contemplate it. When we had in the past, some great speakers wanted to talk to us from abroad, virtually said, no, we want him to be here physically. But today, it's norm. Things that were not even contemplated 2 years ago. And a lot of technology companies, a lot of companies that are focused on things like this have been, for instance, look at Zoom. Where in 2019, Zoom had just about 10 million meeting minutes per day. But as of today, it's doing about 3.3 trillion meeting minutes just within a two-year frame. The revenue plan that they have planned for 20 years has happened in 1 year because of the fact that Digital Technovation is here with us, because of the challenges of COVID, and of course, the remote working practices. Most employees now don't even want to come to office anymore, because they can swear that remotely, they can work remotely and do some of the things that they are doing. These are things that were not conceptualized or thought about, before now. And of course, coming back home, sounding of the gong, for instance, I know that it's digital, even in the stock exchange, things that I'm sure 2 years ago, you don't think that it's possible to do digital sounding of the gong. So what are the opportunities for NGS? And I want to conclude on this. So the opportunities are, as Andrea has mentioned some of it, the need to attract the young fintech, because it's the fast growing sector of the economy. I know that the growth board, which was launched, and I'm happy that the Fintech Association of Nigeria played a role in that, in designing that growth board. We need to really focus on it and make sure that, because look at the Flutter of this world, the Paystack of the world, Internet of this world, and so on. So all these companies, we need to be able to, 5 years ago, we would not be thinking that we would not be looking at them. Look at them today. So those small companies that are coming up today, we need to get them to the stock market, so that in 5 years' time, those will be the great company that we have on the stock market, so that we can join the likes of the New York Stock Exchange, where we have most of the top 10 valued companies are in the telecoms or tech market. But today in Nigeria, too, we're happy that 2 of the telecoms companies are now among the most quoted companies on the exchange. Internet digitization is very, very important. We must digitize internally, and ensure that we ensure that we're able to attract investment. Ngx said $1.9 billion investment were attracted during the first half of 2021 alone. How much of this can we? You can imagine if some of these things are coming into the calendar market, and that is. But the point to note is that most of these funds are coming from abroad. We need to indigenize our capital as much as possible, particularly so that the ownership of those companies, the returns of those companies will belong to Nigeria. That is the challenge that Nigeria Stock Exchange need to focus on, so that we can get the benefit of the future that is here today for the growth of the Nigerian economy. So on this note, I want to thank again the organizers for this event, for giving me this opportunity, and hoping that we continue to focus on that future which is here today. We continue to focus on the younger generation of Nigerians. As very well known, 91% of Nigerians are under 54 years, 60-something% are under 35 years, and these are the future that we have today. This will be the most people that will be using the services of Nigeria's stock exchange. We need to also create programs and things that will address their needs and ensure that we bring them into the investment world. Investor education is very, very important, and all these things can be done digitally. And we have to be able to address the issues of cybersecurity and talent management within the organization, so that we'll be able to get the benefit of that future that is here today. So I welcome you to the future, and I wish you all the very best. Thank you very much.
Thank you so much, Dr. Shegwana. I appreciate the fact that at least when you're talking about the age bracket, you started from around 54. So that gets me inclusive. Thank you so much. I appreciate that, including me in the young generation. That's the future. really belongs to. I appreciate that. Thank you so much. We appreciate your insight. And please don't go yet, Dr. Shegwaino, the chairman of the president of the Africa FinTech Network, who want to share more from your wealth of experience and knowledge and participation and activities in the fintech space, not just in Nigeria and across Africa. Because again, this conference, we have close to 500 participants right now from Africa and around the world, and the comments are coming through, so we appreciate everyone. Please, for your questions directed to either of any of the speakers or the panelists that will be coming up immediately after this, please keep them in the Q&A. Let's use the Q&A button so that we can separate comments, introductions of yourself, which is coming to the chat room button, separate from the questions that are coming. Thank you so much, so that we can quickly at the back end know what questions the moderators for the panel will take. Then we'll pick them, pitch them to the panelists. Thank you so much, everyone. Dr. Shegwaino, thank you very much. We appreciate your presentation. The first panel, which will be rolling on right now, will speak to a very important point, the path to exponential growth. That is quite important if you look at bringing technology platforms and emerging markets or frontier markets together. And if you look at the array of the speakers, the panelists that have been lined up, the man who will be doing justice to this panel is Adesoji Solanke, who is the Director, Frontier and Sub-Saharan Africa's Bank and FinTech Equity Research at Renaissance Capital. Adesoji will be introducing members of his panel and will lead us into the first panel of this webinar, Technovate by Nigerian Exchange Limited. Adesoji Solanke, you have the floor. We'll hand over to you for the next 30 minutes.
Okay, do you hear me clearly? Yeah, sounds good. Okay, good morning and thank you for joining this Ngx 2021 Technovation panel on the path to exponential growth, looking at new technology, platforms, and learnings from emerging markets. Today's conversation will focus on the impact of technology on organizations in emerging markets, how successful models from this market can be leveraged for growth, and to what extent they can be replicated elsewhere. For today's conversation, we'll be joined by some highly knowledgeable actors in the Africa tech ecosystem. I'm pleased to introduce, first of all, Olumide Bolumole, who is the divisional head of the listing business at Nigerian Exchange Limited, and was previously the acting managing director of FBN Quest Capital from 2018 to 2019. He's followed by Iniabasi Akpan, who is the country manager of OPay in Nigeria. OPay is a global fintech company with a mobile money operator license from the Central Bank of Nigeria and currently processing about $3 billion in transactions per month. Ini himself is well versed in the sector with almost 3 decades of experience spanning his career. I'm also pleased to introduce Tope Kola Oyene, who is a partner at McKinsey & Company and a transformation expert with over 20 years of global experience across a variety of industries. Topsy, as she's often called, is passionate about the opportunity for digital innovation to accelerate economic development and sits on the advisory board of Endeavor, which empowers high-impact entrepreneurs for business growth. And last but not the least is Inya Boyeji, who is the founder and general partner of Future Africa. He co-founded 2 African unicorns, Andela and Flutterwave, and has helped build other fast-growing African tech companies such as Jumia, Kobo 360, 54 Gene, and several others. I am Adesoji Solanke and I lead Renaissance Capital's Frontier and SSA-focused banks and fintech equity research, as well as our venture investing teams. As a firm, we support the Africa tech ecosystem with advisory, research, and venture investments, with boots on the ground in Egypt, Nigeria, Kenya, and South Africa. If you have a question for the panelists, please put it in the Q&A box. And without further ado, let's kick it off. I believe all the panelists are on now. Yeah. Okay. Let me start off with you, Ian. I know you're still over the moon following Andela's monster race from SoftBank, but let's look at where you sit, running a venture investing platform and having launched several startups over the years. How do you think about the role of technology in driving growth at a country, industry, or organizational level? It would be great if you could share an example of how tech companies are driving this growth and reshaping industries. Over to you, Ian.
Thank you very much. Thank you very much, Soji. I'm grateful that the leadership of NGX decided to have me here. Can you hear me clearly?
Yes.
So in thinking about the role technology has already played, because it is already actively playing a role in helping make our country more productive and prosperous, it's helpful to think about some of the biggest resources that we've been able to capture as a result of leveraging technology in more different ways. For example, when you look at a company like Andela, right, which basically helped to transform human capital that was previously going unrecognized and unrewarded into export skills and services exports for the global economy. And then you see Flutter, which basically helps businesses in Nigeria to be able to connect to the global economy. You can already see what the practical impact of technology and technology solutions are in helping make the country more prosperous. But I tend to think about these things in a much broader lens. So even beyond thinking about it from the point of view of productivity, I think about it more from the point of view of impact and access. The reality is a country of 200 million people, right, is too big to govern or to administer in specific ways. A practical example is our banking system. We have in our country about 5,000 banks branches. And post-COVID, many of those branches have not opened a single day. The reality is that, I'll use the example of my church. My church has 4,500 branches. So my church alone, which is not the biggest church network in Nigeria, has more branches, has almost as many branches as the entire banking system. But banks cannot afford to keep establishing branches. It's very costly. So realistically, the only way to serve a population this big while enabling cost-saving and leveraging our over time is if we can leverage technology, deliver, and still has capacity to deliver. Which respects, just to wrap up, you look or even at the stock exchange, right? The data that comes to us is that about the third largest amount of trades on the stock exchange is coming from stock trading apps in partnership with member institutions that are buying remotely on the stock exchange. The stock exchange itself needs to recognize that technology is the only way it can grow. People like me are not going to be interested in coming to the stock exchange, getting a form, filling out manual forms, and doing all of that. But by embracing the likes of Bamboo, Shaka, Trove, and others, they actually stand a chance at being able to scale the industry the way the banking sector has been scaled as a result of the use and encouragement of technology. So these are the issues. Thank you.
Okay, thank you, Ian, for your insights. Let me now come over to you, Topsy. So since the global financial crisis, we've seen an outburst of innovation around the world, not in the least within emerging markets. First of all, what are 3 of the most transformational tech trends you believe will shape emerging markets over the next decade? And more importantly, how do you think business leaders should respond to disruptive innovation, given potential implications for the cash cow, which is often their core business? Over to you, Topsy.
Thanks a lot, Soji, and it's great to be here. Thank you to the NGX team for having me, and really excited about this conversation. I think that when we talk about technology trends that are transformational, right? Earlier this year at McKinsey, we developed a report on sort of 40 of the 40 technologies that we think are going to be transformational, going forward in the next 10 years or so. And we also tried to identify like 10 key trends that would actually shape how things how things play out. But when I think about emerging markets, I actually like to think of it from the perspective of, what technology should we deliberately drive to actually bring about the impact that we want, right? So that it's not just technology for technology's sake, but technology that solves our own specific problems. And when I look at it from that perspective, I think 3 could be very, very critical for us in emerging markets and in Africa specifically. One is blockchain, right? I think it goes without much conversation. I know a lot of the discussion has been around cryptocurrency, but I think it's really shifted the focus from what the real conversation is around sort of the blockchain technology and the trust architecture and what it enables, right? And I think like when we think about emerging markets and we think about places like Africa where we don't have a lot of the infrastructure that you have in the West, there are a lot of opportunities for us to leverage blockchain in terms of just government services, in terms of documentation, in terms of record keeping. I look at mortgage markets, for example, in Nigeria that we've spoken about a lot, right? In terms of just land titles, the difficulty in getting mortgages. And these are things that could be addressed by blockchain, right? So I think that's one area that I think we really need to explore. And maybe just as a side note, in terms of job creation, right? I think about what blockchain is enabling, even with things like NFT, right? I think this morning we just heard about, young Nigerian who's basically selling digital artwork, globally through Christie's, right? And selling NFTs from digital work. So I think beyond the problems it helps us solve, it also helps us address things around employment, right? And just enabling Nigerians and other young Africans to participate in the global market. So that's one in terms of blockchain. I think the second one that's really relevant for us is artificial intelligence, specifically machine learning, right? And how we can really leverage data to help a number of different sectors that we play in, right? I see artificial intelligence being very relevant in the health space, how we think about remote diagnostics, how we think about, prediction in terms of health and how to support, especially in rural and remote areas, right? How we can leverage AI there. It could also be very important in agriculture and across a number of different sectors. I mean, the opportunities are endless, right? So artificial intelligence is the second one I think we need to be deliberate about. And then the third, it's not exciting or sexy, but I think it's very relevant, is cloud computing, right? We are seeing the shift in terms of, people doing more cloud, right? There are some regulatory things that need to be worked around in terms of what can be on the cloud, what needs to be still, hosted, on in country and on premise. But I think being proactive about how we think about cloud really enables us to get to market faster, gives us access to innovation, things that could be reused, software as a service, and it could really help us just basically remove barriers to innovation. So those are the three trends that I feel really hold a lot of potential in emerging markets, especially if deliberately deployed. On the business side, when you think about how do firms think about disruption, what should they be looking at? I think there are a couple of things. One is, I think businesses just need to be more open to experimentation, right? Because there's so much happening, things are happening so fast, you really can't keep up. So you need to be open to experimentation. You need to have people who are just trying out new things, right? So you heard about NFTs, just open it up, try it, right? You heard about blockchain, instead of debating the, whether it's real, it's not, it's, try it out, just experiment. I think organizations that are deliberate about saying, how do we keep up to speed? How do we create sort of opportunities for experimentation would benefit. And then I think more importantly is also partnerships. You cannot move fast alone, right? You need to think about how to collaborate. How do you create some of those structures? How do you get a piece of the pie and see what evolves? So those would be my initial comments.
Okay, thanks a lot. Thanks a lot, Topsy. I'll probably pick on some of your points later on. But let me come now quickly to Olumide, who is currently on mute. We're all here today because the NGX is looking to play a more active role by fostering development in the Nigeria and broader Africa tech ecosystem. Can you speak to how the exchange is looking to help facilitate capital formation for technology companies?
Thank you, Soji. It's a very, very good question. I mean, indeed, I think Dr. Aino touched on that earlier when he mentioned that the NGX has actually historically worked with organizations like the FinTech Association just to see how we can be more open and be more supportive. Quite clearly, we are positioning ourselves to be supportive of capital formation for the tech sector. And of course, if we compare ourselves with what's happening in other jurisdictions, we can clearly see that technology companies really represent the future. And we feel that the more of these companies that we can attract, it actually supports what one could call our traditional listed companies, because of course, a rising tide lifts all boats. So if we can really grow market capitalization by attracting technology companies, it certainly will support the market growth in general. But one of the things that we've tried to do quite intentionally is, rather than just us think about some of the reasons or some of the hindrances for technology companies not coming to the public markets within Nigeria, it was important for us to directly and deliberately engage and actually have frank conversations. And in those conversations, we're able to distill certain areas where there was some opportunities for us to tweak things and to modify things, most especially in our listing rules. The reality is our rules are written by and large, and rightly so, for a certain kind of business and for a certain kind of investor. If we felt that it was important to actually engage and see perhaps there's an opportunity for us to look at specific things. So if I pick a simple example, many of our listing rules require that companies that are listed are profitable. But if we are looking to attract growth and growing and technology companies that are largely in their early stage, I think Dr. Aina mentioned, I think it was Benga that mentioned companies that are around 4 years old. Quite clearly, having a profitability test or a requirement for profitability is a major hindrance to attracting technology companies. So that's something that obviously we're critically looking at and seeing, maybe this is something we can find another way of achieving that same metric, as if it were, or even doing it away with it completely if the buy side doesn't particularly care for that. Indeed, our exchange or our business really supports capital formation in between buy side and the issuer side. So it's important that whenever we solve solutions, we create solutions for the issuer side and for the founder side in a way that the investor is comfortable with. So we need to balance both sides of that equation. The other area that we've seen is around corporate governance. Our corporate governance requirements may need some modification, and we're very intentional in having conversations with that and seeing how we can tweak things to make it more attractive or more supportive of companies that work that operate in the technology sector. Financial reporting is another way. I mean, we have quarterly financial reports that are IFRS based, and there are many good reasons why that exists. But maybe there's an alternative way that we can deal with that, of course, within the context of the legal requirements of the nation, and where there are specific opportunities to modify things on the legal side of things, then we certainly would advocate for that. Indeed, one of the things that we're doing extensively is to give our inputs in the startup bill in such a way that it's more supportive of the broader ecosystem. But if I can switch the lens towards the buy-side community, the buy-side, the institutional buy-side community, and indeed the HNI and retail buy-side community within Nigeria also needs some help in valuing these technology companies. I don't think one can look at a traditional business and value it with the same metrics as they would a technology company. So maybe there's an argument that we should create a separate board or a separate subgroup within our market that deals specifically with technology companies so that they can be measured on a like-for-like basis. I don't think if one looks at a cement manufacturing company or a traditional bank, even if you will, on a PE multiple basis, and then you compare it with a technology company, having them match like for like may not be the best way to evaluate it. So maybe there's a need for us, and it's something we're looking at very critically, to group our technology companies in their own subsector, on their own sub area within the exchange, such that one can evaluate them on a like-to-like basis. It also speaks on education. We also need to spend some time with it, and we have actually done some work in that area, but there's some additional work that we have in the pipeline where the buy-side community can evaluate and measure and value these technology companies in a way that is at least somewhat in line with what global investors look at it, such that from an issuance perspective, value isn't destroyed. So overall, those are some of the things that we're working on. It's more extensive than that. This event indeed is one classic example of us looking to engage, us looking to have frank conversations, and also learning how we can modify things to be more attractive to the technology sector.
Okay, sounds good. But before I move on from you, Olumide, because you outlined quite a number of exciting initiatives that NGX is looking at, but I want to give you an opportunity to address one of Ian's earlier points about how the NGX may think about moving the Nigerian markets to 100% end-to-end digital transaction process. You know, there are a number of digital first startups driving this trend. but how may the NGX be looking to support or facilitate this trend? And is there anything investors or market players should expect going forward?
So digitization and digitalization has been a core focus of the exchange. I think Mr. Popola spoke earlier in the day that earlier in the session that for 18 months now, the exchange has operated entirely virtually with no single downtime. And that really has come from years of investment in that area. There is a broader capital markets ecosystem question around digitization and digitalization that needs to happen. And indeed, that effort is really being spearheaded by the apex regulator, the SEC, of which we are extremely supportive of. There are a number of technology initiatives that one needs to do and needs to build around identity management, around even end-to-end processing. There are certain initiatives that we're doing on our side of things around the market infrastructure and the market structure. Perhaps we can look into post-trade allocation, for instance. But perhaps we can look into. I mean, we are already pretty much digital in the way our issuers and our investors engage with us, but where there are the gaps are in the tie-ins between the various stakeholders within the exchange, of which within the capital market ecosystem, of which the SEC is doing some work in that area, and we're certainly supportive of that.
Okay, sounds good. Look forward to how this trend evolve over time. Let me move to a different theme now around ideation and passports. You know, how you passport that across markets. So let me come now to you, Inyabasi of OPE. As you know, we've closely followed the OPE story at RANCAP, and it's good to see how you're now looking to replicate your Nigeria successes in Egypt and Pakistan. If we focus on just Egypt, for example, what are the major similarities or differences relative to Nigeria, first of all, and what are some of the key learnings from your Nigeria experience that can enhance the Nigerian capital market? Over to you, Ini.
Thank you, Soji. That's a very interesting and important question. You know, so when you take a look at Egypt, you'll find out that Egypt is the most populous country in the Arab world today, with a high unbanked population. Only 35% of the people are banked, and that's a huge opportunity. When you take a look at it, it's important that you have in place the appropriate regulatory frameworks and systems, you know, to foster financial inclusion. So there's a huge gap in banking there, and that was due to the regulation in the past, where that was a bit prohibitive. People in the Egyptian economy, or the population, were required to have things like employment letters, and they needed to have certain documentation like national ID before they could open a bank account. And those were very prohibitive. But new legislation and regulatory changes have brought about, you know, an opportunity for fintechs to play in that space. When you take a look at that compared to Nigeria, Nigeria was in a similar situation several years ago. So you find out that Egypt is in the early stages of a fintech innovation. Nigeria started that like way back in 2010 to deepen financial inclusion, or to bring on board those who have been unbanked in the past. You know, but when you now compare that, you know, to Egypt is still several years behind, you know, compared to Nigeria. So there are a number of similarities when you compare Egypt and Nigeria. Today, you're beginning to find out that there's a huge interest in that market, and we have a huge interest in that market because we think that we can replicate exactly what we've done in Nigeria. One of the things that we did was focus on making sure that cash was available through an agent banking network. Today in Egypt, cash is king. You know, a lot of transactions are still done with cash. More than 67% of the people still collect cash or pay cash. So there's a huge opportunity for fintechs to play in agent banking. The regulatory frameworks are beginning to. The regulatory frameworks pretty much are similar to Nigeria now. There's a payment. You can have as a fintech the license to operate a payment facilitation, and that's key to driving innovation in Egypt. So agent banking is a very core aspect of what is required now in Egypt to actually onboard those who are unbanked. Wallets are a big opportunity. Today in Nigeria, we've actually rolled out similar solutions with mobile money operator license because the requirements for KYC are actually much lower for wallets than they are for a bank. But then also there are threats related to that. But the fact is that if you are going to onboard the people, then they need to be, the KYC requirements need to vary depending on the kind of volumes or transactions that they do. And fintechs have a role to play in that space because the banks have legacy systems and legacy processes that don't adapt to encouraging or fostering financial inclusion. And so the fintechs can support or play a role in that sector to bring people on board. That's one of the things. Also, it's important that in Egypt, the merchant space is also, you're able to digitize the merchant space in Egypt where people can actually collect or accept digital payments. That's one channel also that's very important if you are going to get people to begin to pay digitally. And we feel that the POS and some of the other channels, the online channels, are important to enabling that in the Egyptian payment ecosystem. So these are some of the key things that we feel are important. Today, if you also take a look at Egypt, there's a high smartphone penetration in Egypt that makes it possible for people to roll out apps to various customers. I mean, apps have become pretty much the norm now for fast tracking, innovation and for driving, digital payments. Mobile apps, the internet, and the broadband infrastructure are things that are critical. And so those are the similarities to Nigeria. When you take a look at, like I said, the huge unbanked population, so there's a huge opportunity there, and we think we can do the same thing in the Egyptian market. But one of the things that I must say is that you can't take technology and then just implement it, the way it is. You have to localize it. So it's important that we also develop new business models because you can't take the same models, implement those same models in Egypt and expect it to work. So all we're doing is leveraging technology, but at the same time, it's important to come up with new business models. And if you're going to achieve, if we're going to achieve what we intend to achieve in Egypt. Thank you.
Okay. Well, thanks a lot, Ini. I think that was quite insightful. But I wanted to just see if you had any thoughts around, because you've built quite an expansive business in Nigeria, but in terms of how you think of, how your solutions could potentially support the capital market, because what you certainly have is you have, last mile connectivity, 2 merchants, 2 agents, 2 customers, etc. As you think about what your business looks like, perhaps 5 years down the line, to what extent do you think you can leverage that last mile connectivity to potentially supporting the capital market? Is this part of your thinking? If so, what are you thinking?
Yeah, I mean, what the assets and the infrastructure we built is very is a critical platform which can be leveraged by various stakeholders, to actually drive product innovation. So, for instance, the agent network that we have currently over 300,000 agents, and people who are interested in leveraging that network can actually partner with us, to offer their own products and services. Currently, we've been approached by several players in the investment sector, in the stock exchange, in the brokers, and some other players in the stock exchange who are players in the stock exchange sector. And they are quite interested in leveraging that network to actually do collections for into wallets and then also get that invested in whatever instruments that they may be offering. I think that's where there's a huge opportunity for collaboration between us and several other players currently in the market. The agent network is quite open, and we're willing to collaborate there to ensure that's like you mentioned. Thank you.
Okay, sounds good. Thanks, Ini. Let me, sticking with this same theme, let me close with you know, before we take Q&A, if there's any, Ian and Topsy. So there are many ways people come up with innovative ideas. One is by focusing on first principles, where you go to the building blocks of the situation and you build up from there. Another is by reasoning by analogy, where you iterate on the fundamental principles by sometimes taking learnings from one market and deploying it in another. You know, you saw Ini just highlighted this. From your experience, right? I know you both do different things, but from your experiences to date, how easy do you think it is to take learnings from one market to deploy in another? And any advice to entrepreneurs who are looking to grow this way? Let's start off with you, Iyi, and we'll close up with you, Topsy. So Iyi, you go first. Iyi, are you there? I think you're on mute. Or perhaps Topsy, you go first. Maybe Iyi comes back in.
Sure. So I'd be happy to go. I think, you know, in terms of what you shared, right, whether by first principles or by reasoning by analogy, I think both approaches work, and we've seen instances where you've seen those different models of innovation, right? But I think what's most critical is actually being able to really understand the problem you're trying to solve, right? And I think that's really what is the key differentiator. Understanding the problem that you're trying to solve. If you're going to transport a model, then you have sort of a better perspective as to how you need to modify that model to fit the local market, right? So I think in Nigeria, we have lots of fintechs who've actually done the export model, right? They've looked at models that have worked in the US. They've said, listen, this can work here, but we know we have to refine it to sort of fit the Nigerian context, to fit the Nigerian connectivity, to fit the Nigerian user and all the rest, right? So I think the key thing as you think about innovation is saying, okay, fine, let's figure out what is the problem that we're trying to solve. Now, what similar problems have been solved elsewhere? You can start with that as sort of your building block and then say, how do we now refine it for our market? And I think that's why as companies move, you know, Ini was sharing about, you know, moving from Nigeria to Egypt. As you move to new markets, that humility is required to really spend time to understand the market and not assume away, right? We've seen a lot of people say, oh, fine, you're coming from, you're coming from Kenya or from South Africa and you're trying to do something in Nigeria and you think it just works that way because it worked there and it doesn't, right? So that time investing, trying to understand the local market, trying to understand the problem you're really trying to solve, and then bringing that together with other models, I think has worked quite well.
Okay, sounds good. I'm not sure if Ian is back. I'm guessing not. So let me take one interesting question I see here in the Q&A box, right? And the question is, so right now we have a number of unicorns from Nigeria in particular. So, you know, InterSwitch, Flutter, Andela, OPay, etc. And the question is, how can we get them on the stock market so that we can create investment opportunities for the masses? So I'm going to direct this question to Olumide, right? So help us understand, how is the exchange thinking about, you know, working with this, you know, high profile tech companies, okay, to get them listed in Nigeria, because, you know, increasingly we start to see conversations around, you know, other exchanges, whether it's in London or the US, but how is Ngx positioning itself with these players? And, you know, Topsy, you can come in as well. And I guess we also have Iniabasi of OPay, right? You know, how are you thinking about getting listed? Is this part of your thinking? So let's start off with Olumide. Then we come to you, Topsy. Tell us, you know, to what extent does McKinsey potentially work with this type of companies? You know, what kind of support do you provide? Then Iniabasi, you can tell us, you know, how are you thinking about listing, for example, as an exit opportunity for your early investors? So Olumide, you go first.
Sure, thank you, Soji. It's a very good question. It's a question we ask ourselves all the time at the exchange. For us, the first way to address it is to really have a conversation, to ask, what do these companies actually require? What are they looking for? I mean, it's often thought that the primary reason why companies come to get listed is to raise capital, but actually, alongside that, very close, that sometimes said ahead of that, is to establish credibility. So for us, it's important to understand, is it a credibility question for listing? Is it a value extraction question? Or is it a liquidity for your existing shareholder question? Because they all have slightly different responses. But the key takeaway that we've identified in having conversations with founders and some of these different companies, and they all come in very different shapes and sizes, is that we need to make the process easier. We need to reduce the barriers to entry. Technology companies are often very young and often structured very differently. So the standard one size fits all that we have used historically, albeit with some flexibilities, probably we need to think about that a little bit more and see how we can create specific solutions tailored at technology companies. There's also a buy-side question to this that often gets missed, in that in as much as the companies may want to raise capital, if that's the purposes of getting listed, the buy side must understand how to value these companies in a way that the companies recognize vis-a-vis how they will be valued in other jurisdictions. So there is an education piece to that, and that's something that we certainly spend some time. And it's also some work that also needs to be happen also at the founder or the issuer level, because ultimately there is a story that needs to be told. The buy side doesn't, at least the local buy side, gets that to some degree, and we're seeing more and more of that. But I think we need to celebrate and make a little bit more noise as to what exactly is the story. Because indeed, there are investors out there that may be looking to invest in a company with the expectation of a dividend payment. I would imagine that a lot of technology companies don't quite fit into that bill. So that education, that bridging, we try to play a role with that. We try to foster those conversations. We try to have conversations on the buy side and the sell side to make sure that whatever we've built, whatever we're building, ticks the boxes of both categories, because indeed both are necessary for a successful listing.
Okay, sounds good. Topsy, over to you next.
Yeah, no, I love the points that Olumide made, and I think they're just spot on, right? That question of what exactly are we listing for? What is the listing objective? You're right. And you might dare say that, for a lot of fintechs now, listing to raise capital might not actually be the optimal path for them in terms of their growth objectives, in terms of valuation, and also relative to investor expectations. But I do think there's that opportunity in terms of credibility, right? Which is one of the options that he mentioned, that could come from some form of, I don't know if it's some form of a listing or some form of association with the stock exchange that allows, especially like some younger emerging fintechs, to just get some visibility, whether to angel investors, people who want to dabble in investing in fintech, but they're not part of these angel groups, and they see something that's associated with NGX and then become open to it, right? So I think that's a conversation that we should definitely keep having. And if there's anything that NGX could actually do to support the ecosystem in that regard, I think it will really help overall. When we talk to investors, one of the things that, as you know, everywhere in the world, investors are always looking at this and what are my liquidity options? What are the exit options, right? So I think something that comes in that flavor, or at least from a credibility perspective, we'll start adding to that. In terms of McKinsey, because Soji, you mentioned that, what is McKinsey doing in this space? How are we supporting? So as a firm, we are believers of digital, right? GB mentioned that the future is digital. Dr. Aino said this in the future is here, and that's our firm belief. So we do a lot of work in the digital space across sort of digital business building. We do a lot of knowledge and advocacy around digital and the role that it can play, both in the economy and from a government perspective. And in our Nigeria office specifically, a lot of us, myself personally as well, believe that digital is key for economic development. Some of us believe that this is our opportunity to actually leapfrog. And to the extent that we as Africans can think in that mindset that these technologies are available, how can we leverage it to solve our problems, and not necessarily wait for things to be validated in other markets, but to think about what do these technologies offer us to solve our problems. It goes a long way. And to that extent, we're developing knowledge. We're partnering with folks like Tech Cabal to help sort of, just create awareness of the opportunities within the ecosystem.
Okay, good to know. Thank you, Topsy. And Ini, let me hear, it'd be good to hear your thoughts. I'm sure people are keen to understand your thoughts here.
Well, it's a very interesting question. So the thing is, I think a lot will be determined by, what our investors think and what they believe. Every investor is driven by a return on investment. What would be the benefits, to us for listing on the Nigerian Stock Exchange? And I think that, just like my colleague has said, it's important to have that discussion, both internally and externally. And then that will be a major decider on what the full benefits are to an OPay listing in the Nigerian market, and then also, what would be the benefits to our current investors. So a lot will be driven by them. And obviously it's a conversation to have. And I think that that discussion should start at least very, very soon. And I think that an engagement or a discussion can begin with the stock exchange to see what is possible for OPay on the Nigerian market. And those are things that we can discuss with our investors.
Okay.
Thank you. Yeah.
Thank you. I'm sure Olumide is taking notes, and I presume the NGX will be in touch in some shape or form. My final question to close this panel, for each of you, what is one area of tech in Africa that you're most excited about going forward, and why? That'll be the last question. So let's start off with you, Topsy, then Ini, then we'll wrap up with you, Olumide.
That's a tough one, because you started off asking me what are the three I'm most excited about and trying to pick one of the three stuff. So I'll just combine it. I think the combination of artificial intelligence, specifically machine learning, and blockchain are the things I'm most excited about. And I'm most excited from a perspective of employment creation. I think having skills and being able to participate in this space just opens up the whole sort of young African demographic to global opportunities. So.
Okay. Thank you, Topsy. Ini?
Oh, I have a technology background, so I have a bias for certain things. I think, Topsy has actually mentioned, a couple of them, and I agree with Topsy absolutely. But I'd also like to add big data to that. I think big data and analytics is very, very important if you want to understand what the customer needs are and pain points. Those are things that are going to be very critical. Cloud computing, big data are going to be major factors because one of the things that we lack in Nigeria and even in Africa is data. And so it's important that we're able to analyze data and then be able to come up with products that are innovative to meet the customer needs. Thank you.
Okay, thank you very much, Ini. And Olumide, let's hear from you.
Yeah, so I have two. I mean, as an exchange, we generate a lot of data. And obviously, there's an opportunity for us to, I guess, stretch that from a product development or from a product development perspective. So big data is clearly an area that is very important to us. But second to that is blockchain. I certainly see that there's a natural leapfrog from blockchain to tokenizations, to fractionalizations, to securitizations. So there's a whole slew of capital market type products that can be built off the back of blockchain. So I see that as an opportunity that correlates well with capital market development and technology development.
Okay, sounds good. Look, thank you to all our panelists. We unfortunately lost Inyi somewhere along the way, and we got apologies from 54 Gene. Unfortunately, he couldn't join. But thank you very much for your time. Thank you for taking all the questions. I'm going to hand it over now back to Boasin, I believe. And yeah, hope you enjoy the rest of the conference.
Thank you. Thank you very much, Adesoji Solanke of Renaissance Capital. A very insightful panelists you have there, very insightful, quite a lot of learning curve on both sides, from those who are into head over heels into technology, and then on the exchange, on the NGX Limited on the other side, there are those who are investors, those who are startups. I think all we're trying to have here is what you call this marriage between those who are fund providers, those who got a brain to put it on the ground, and the exchange that wants a whole lot more, the more the merrier, on the board of the exchange or the NGX Limited. So it's all good conversation we're having. Thank you for piloting that affairs very well. I just you for Renaissance Capital. Very interesting panel. So the second panel is going to be as interesting as well. But just before that, the NGX has put together this video, which is the NGX Tech Stack Showcase. It's going to run for a couple of minutes. So we'll enjoy that. Folks, grab a cup of coffee, a cup of tea, but don't go away. My panelists for the second session are standing by. So ease off a little bit. Let's enjoy this video from the technical team at the NGX Limited. Then we'll be right back for the second panel.
Hello, and welcome to the digitized world of Nigerian Exchange Limited, NGX. At Nigerian Exchange Limited, we see a world of opportunities for the growth of the Nigerian capital market and the larger economy through the lens of technology.
That's why we have built a demonstrable track record of groundbreaking technology solutions aimed at improving the experience of our stakeholders across the value chain.
Today, we, alongside our stakeholders, are reaping the rewards of continued investment and consistent capacity building in technology, automation, and digitization since the start of the X era in 2013.
XGen is where it began. In 2013, we saw the need to improve the trading experience in our markets, speed up transactions, and provide wider access to real-time data. XGen was the perfect solution, bringing about the advent of mobile trading technologies to the retail and institutional segments of our markets.
Building on market's reception to XGen, we moved to simplify the experience for our issuers with the launch of our issuers portal, X-Issuer. X-Issuer ensured that all submissions of critical information by issuers was strictly online, eliminating the burden of physical collation and submission. Upgraded in 2020, X-Issuer comes with a modern layout and improved functionalities to aid compliance among issuers.
In light of the success recorded with X-Issuer, we built on the concept to deploy X-Filing in March 2021. X-Filing is a fully integrated, secure web interface designed to enable the submission and processing of securities listing applications online. For companies that wish to list any security, you can enjoy a seamless end-to-end process from submission to approval from wherever you are.
In addition to this, seeing the benefits that we could reap from cutting-edge technology, we went a step further in 2014 to create solutions for managing market infractions, and X-Whistle was born. With X-Whistle, any individual anywhere can report the violation of NGX's rules or any perpetration or suspicion of fraud in the capital market. Following an upgrade in 2020, X-Whistle boasts an improved user interface and easier navigation to enhance user experience.
XSmart took market surveillance technologies at NGX to an unprecedented level. For the first time, we would be leveraging artificial intelligence to proactively monitor market activities and spot incidents of fraud, spoofing, or manipulation.
Recognizing that we had the potential for so much more, NGX created the Enterprise Innovation Hub in 2018, which gave rise to the first ever X-Cathon in the capital markets later in 2019. Through the Innovation Hub, NGX continues to provide support to the next unicorns out of Nigeria and Africa through its incubation and accelerator programs. NGX also provides leadership to regional and global communities through its membership in disruptive technology and fintech innovation work groups in the African Securities Exchanges Association and World Federation of Exchanges.
Over the years, our suite of technology solutions continue to expand in our efforts to serve stakeholders better. In 2019, we launched X Mobile in beta mode to provide market participants, especially retail investors, a convenient, faster, and real-time access to the exchange's activities. Given its success, we released the enhanced version complete with market snapshots, market news, trading license holders directory, and trade simulator in September 2021. X Mobile is available on the Google Play Store and Apple iOS Store.
Given our unique positioning in the market, NGX is an enabler of technological advancement. Our commitment to delivering on this mandate gave rise to the launch of Sentry GRC in June 2020 to support our stakeholders in automating back-office functions such as governance, risk management, and compliance functions to increase efficiency, effectiveness, and reduce associated costs.
We pride ourselves in being the pioneer exchange championing much-needed solutions in the market and delivered once again with the launch of the XPO, the first end-to-end public offering subscription platform in Africa in December of 2020. XPO drives paperless public offer subscriptions, reduction in challenges of unclaimed dividends, and a full end-to-end automation of IPO subscription process.
In addition to that, we upgraded our data portal to provide a more efficient and user-friendly experience for subscribers. We introduced X Data Portal in 2013 as a repository for real-time, delayed, end-of-day, and historical data for all financial instruments listed on the Nigerian Exchange Limited. The new features include data products, subscription management, payment gateway integration, and a lot more. For decades, our Factbook has served as the most reliable compendium of capital market information, ensuring easy access to current and historical market information on the exchange for both local and foreign investors. Today, X Factbook is completely digital and can be purchased on our website at www.xfactbook.ngxgroup.com.
All of the robust technology solutions we provide support effective reporting, information and process management, and regulatory functions across the exchange. As part of our fully integrated technology infrastructure, we run all the solutions via our state-of-the-art data center, and where payments need to be processed, we have a solution for that too, XPay. These efforts have positioned NGX to drive effective listing and investor engagements across key functions, and the results speak for themselves.
In March 2020, following the outbreak of COVID-19 in Nigeria, NGX Group made the call to activate its business continuity plan and transition to remote working and trading. During the extended period of remote working and trading, we are proud to report that there has been zero disruptions to operations for any of our stakeholders. NGX emerged the best performing exchange in the world in 2020. The ETF market experienced its best year yet, with a 272.30% increase in market capitalization in 2020. Bond market capitalization rose by 35.52%, and over 4.03 trillion naira was raised by government and corporates on the NGX platform. For us at NGX, digital transformation is the next stage in this new era, and we remain committed to leveraging advancements that will support capital raising, trading, and settlement processes to democratize finance in Nigeria.
Thank you for coming on this journey with us. And once again, welcome to the digitized world of Nigerian Exchange Limited.
Yes, a warm welcome to the world of digitized Nigerian Exchange Limited. That video takes us through the journey that started in 2013. And thank you very much for NGX Limited bringing everyone up to speed on what you've been achieved and how that is translating to the growth in the market in terms of the market capitalization, the various product offering classes, and how the returns are going to investors, and how it's helping issuers and others, including governments at all levels, to utilize the more technologically advanced XGen Nigerian Exchange Limited. Quite an innovation period we're in. And now we're going to take the webinar further with the second panel, which will look beyond technology, talk about our platforms, technology, business models, innovation, data, and things like that. Putting all of this together in a single basket, and use that to leverage to drive opportunities that are available when you use the Nigerian Exchange Limited as an issuer, as a trader or a company, whatever you're doing, as a market operator or market professionals or data users, research analysts, including the media, is the focus of what we're doing today. And this second panel will raise that conversation from that very incisive first panel we had with Adesoji of Renaissance Capital and his team earlier. So let me hand you over to Oremiyi Aka, who is the Chief Core Operations Officer at InterSwitch Technology or InterSwitch Group, to introduce this panel, then take us through the next 30 minutes of this conversation. And as always, remember, keep your chats coming. We appreciate your comments in the chat room, but also keep your Q&A, your questions in the Q&A box for this next panel and other speakers as well that have spoken earlier. You have the floor.
Hello, good morning, everyone.
In fact, very exciting to take over from the first panel where we focused a lot on technology. And the objective of this second panel is to discuss beyond tech. What are the other factors that are required and necessary for growth and to deliver value? So today I'm joined by a host of other experts in their field. And I'd like to introduce, starting with Alessia. Alessia Balducci, you're welcome. Alessia specializes in the development and scaling of nascent businesses with international presence. She is the senior ambassador for Seed Stars in Nigeria, and she has been managing their activities in Nigeria since 2017. Now, Seed Stars is a Swiss-based company founded in 2012, and their focus is to impact people's lives through technology and entrepreneurship. Alessia, you're welcome.
Hi, everybody. It's great to be here.
It's great to have you. Chidima Iweke. Chidima, I also welcome you as a partner at Microtraction. Now, Microtraction does very interesting stuff around early stage investment funds, and they have a vision to fill the pre-seed funding gap within the African ecosystem. And I think that's amazing. And Chidima has a history of having worked at the US Wall Street, so she brings in an international perspective today, and we look forward to having a great conversation with you, Chidima. You are welcome.
Thank you so much. Happy to be here.
Dayo Obison. Dayo, thank you for being on this panel. Dayo is the Executive Commissioner for Operations at SEC. Now, SEC, Security Exchange Commission, is the apex regulator of the Nigerian capital market, and they are mandated by law to develop and regulate the Nigerian capital market. So having Dayo on our panel today definitely will add huge value, because he's not just the head of Executive Commissioner for Operations, but he has over 15 years experience in this space. And so we are happy to have you here. Dayo, you're welcome.
Thank you very much. Happy to be part of the discussion. Thank you.
Yes. Also joining us is Kola Aino. Kola is an angel investor, technology entrepreneur, and venture capitalist, and that's great. Now, he is the founder and general partner at Ventures Platform, an early-stage Pan-African discovery fund, where they have a portfolio of over 60 category-leading innovative companies that are delivering market-creating innovation to solve Africans' chronic non-consumption. So, Kola, we are happy to have you. Welcome.
Thanks for having me. Delighted to be here.
And finally, I'll introduce our last panelist, Andrea. Andrea Eaton. He is the co-founder and CEO of F10. F10 is a global innovation ecosystem, startup incubator and accelerator. And they have offices in Zurich, Singapore, Madrid, and Barcelona. He's also the managing director of Head 6 Fintech Ventures, a multi-million-dollar corporate venture capital fund, and they specialize in investing in global early-stage startups. We welcome you, Andrea, and we are happy that you're bringing, again, an international perspective to this conversation. We look forward to a robust conversation. I am Oreme Aka, as previously mentioned. I am responsible for customer experience at the InterSwitch Group, where we have been for the past 19 years committed to our vision of an Africa where payments are seamless and where we deliver value across the ecosystem. So let's go right into the conversation. So leading up from the first panel, where the focus was a lot around technology, and how there's a lot of growth in the technology space, in investment, and how the capital market is also can leverage and has been supporting that and seeks to support that further. Let's talk a bit more about the other factors beyond technology, the other factors that contribute to this growth, to sustain and support it. So I'd like to start. Kola, tell us, I know based on your experience as an entrepreneur, as an investor, a technology entrepreneur, what would you say is the role of partnerships in the growth conversation?
Sure, perfect. Thank you very much. Aka, for that introduction. I like to just start by saying I'm super delighted to be here because it's, for me personally, it's been a 5 to 6 year journey. I remember giving a talk several years ago titled "Who Will Own Our Future Unicorns?" And at the time, I was really challenged because I knew that we didn't have any unicorns then. I knew that we would produce unicorns in Lagos, in Nigeria, but I was really concerned that very little of the ownership of those unicorns would be Nigerian or African. And fast forward, just yesterday, another unicorn emerged from Africa. And really glad that today the NGX is furthering this conversation about how we can become, the NGX can become accessible to this new crop of companies that we are building. As you've said, in the work that we do at Ventures Platform, besides just injecting first loss capital or early pioneering capital in the companies that we fund, a big part of our value add is actually looking to create corporate partnerships that can further these companies. And so you can take it for granted that the startups that we call unicorns today, the startups that are leading in our portfolio, have gotten where they've gotten on the strength of partnerships with large corporates. And oftentimes, you would find partnerships that are formed to help companies with things like distribution, access to large balance sheets, and in some cases, regulatory cover. And so this is a well-storied flavor of partnership that exists in the startup ecosystem. But I think even more critical is the need for startups at the earliest stage, as well as regulators and sort of public operators like the NGX, to really start to think about exploring how you could have startup, regulator, government platform partnerships. Because as this ecosystem becomes more systemic, as the value and scale and reach of our companies becomes more widespread, there's real need for deep collaboration and deep partnerships from the early stages and all through the life cycle of these companies. I believe very much that if this is given priority by both sides of the table, you will find that a lot of the pain points, there's been a lot of talk recently about the regulatory headwinds seeming to be blowing at a much more faster velocity. And I think to some extent, some of that is true. But if we really start to look at deepening partnerships, I think we can really have a calmer, a more progressive sort of regulatory landscape. Because what partnerships like this can do is that they can deepen understanding. We can go from being reactive to being proactive. And so whether it be regulators being, and I'm glad we've got the SEC here, the SEC has sort of pioneered with their sandboxes and all sorts of interesting innovations that allow for partnership. I think this is really, really important. Now, especially so if we realize that these startups are really critical for national development. And this is not just because they create jobs or they bring in FDI or these companies pay taxes. It's really that the kinds of innovations that the startups bring literally move society forward. They literally set the agenda for the next phase, the evolution of various industries. And if Nigeria is really serious about continuing to sort of not being left out of the fourth industrial revolution, I think we need to move from a wait and see, we'll catch them when they get big. And I'm not saying anyone is doing that, to a more collaborative partnership approach. And so I invite all my colleagues on the investment side to really think of partnership beyond just partnering with corporates, to also partner with regulators to help shape the regulatory landscape and the interventions. Thank you very much.
Thank you so much. You dropped a lot of lines there that are relevant. You talked about where deep partnerships, how it's important not just to start when they've grown, but to grow with them. And being able, personally, I'm privileged to have worked in the fintech space, for a number of years now, and seeing it grow into what it is. I agree that it's very important that the frameworks be set up as and built as the industry grows, so that the regulator is more collaborative. We're going to come to the issue of regulation. We're not there yet, but thanks for bringing it up. I've held some thought, and I will not lose that. Now, Chidima, I'm just looking at, considering your background, your experience in the US, and now what you are currently doing. I'd like you to, building up on that conversation of partnerships, I'd like you to talk to us about smart business models that you have seen that have differentiated winning ideas, winning companies. Can you please share some light on that?
Yeah, sure. So when I look at kind of like business model innovation, it's really important, especially now within frontier markets and emerging markets, where kind of like economic development is still kind of growing, and we have purchasing power and we have buying power kind of like being a bit limited. I think it's particularly important for companies to kind of like that are especially serving, I would say, the middle to bottom of the pyramid customers, to be very innovative around their business model, right? So when you think about a business model, what I think about really is, how do you create and capture value, right, through your business? So oftentimes when people are building their businesses, they don't really quite take the time to kind of think about, what kind of product am I building? Who am I building this product for? Who am I serving? What is the value that I'm kind of like giving to people? What is the willingness to pay of these individuals? What is their ability to pay? So like some of these key questions are really, really important when you're trying to devise like what a winning business model. And when you think about all of those things, I believe the companies that like do quite well and tend to win in this respect are companies that look at it not in isolation, but with a competitive kind of landscape in mind, right? Because in isolation, any business model could just win. You're the only one in the market. All you have to do is put something out there. But you have to rope in the fact that there are technological advances right now going on. There's also kind of like people that are, your rivals are essentially competing on costs. So thinking about your business model with a competitive landscape in mind is really key, right? So when you look at what is a good business model, what does a good business model feel like? Like, I think a good business model creates what I would consider like I call it a virtual cycle, right? And that being said, it's just like, that allows the business to continue to kind of grow and create a moat and create a competitive advantage that is actually like sustainable, right? So if you look at, for example, just to make it a bit topical, if you look at the likes of Apple, right? And the interconnectivity that they've kind of like provided with their products, and then you're talking about the design of the product, the functionality of the product, all those things come together to give the customer a seamless experience, right? And then on top of that, what they've now done is said, hey, you should have an Apple phone because I want to be able to share my photos with you through AirDrop, right? So then you see this kind of like virtual cycle just being created, right, by the model that they have now built, right? So and what that does is create stickiness, and when you have this kind of like this cycle that where almost like it's somewhat of like a network effect gets created by this kind of business model, it then helps you realize, it then helps like Apple actually maintain a really good customer base and keep growing, right? So to me, when you have a business model that is very, very, very smart, what you see is that as the cycle just kind of like spins, you realize that like the stock of the company, right, and the resources of that company continue to grow, right? You enhance the company's competitive advantage. So smart companies tend to design business models that trigger like this cycle. And over time, what you see is that it expands the value creation for that company. They're able to capture that value. So to me, it's almost like a snowball effect, or you can also call it like Newton's first law, right? An object in motion that it's going to keep moving at the same speed in the same direction, right? Unless something stops it. That's what to me a really, really good business model does, is create this kind of virtuous cycle that just keeps building on itself and building on itself and allows you to create a moat and a competitive advantage for your business. So I will stop it there.
Thank you, Chidima. And I mean, you said some great things. You talked of sustainability. You talked of being able to sustain value, build a moat. And, you know, based on that, Alessia, you know, I'm so glad Alessia is here, because based on the work, Alessia, that you're doing with Seed Stars, I'm sure you have seen some Nigerian African businesses build this kind of, you know, successful models, right? So I'd like you to tell us, Alessia, based on your experience, some critical factors that you have seen that have enabled some of the businesses that Seed Stars has invested in, or maybe you've invested in, but maybe some businesses you've interacted with in your own space. What factors have, you know, really contributed to their business models being sustainable and successful? And if you could specifically talk about, I know data is key, right? So, I mean, what factors generally, or how specifically have you seen data play a key role in those sustainable business models? Alessia, please share with us.
Thank you. That's a great question. I think as you mentioned, we talked so much about technology in the initial panel, and we at Seed Stars, we look for highly scalable tech businesses. We're all about tech, but I think we can all agree that's not the only factor. I think about data in particular, I think we can all agree it's been quite interesting to follow the global conversation around the role of data in the digital economy in the past years. From data being the new oil and the ethics around data governance. I think I'm personally very interested about how both public and private sectors are using data and how we can democratize access to data. It's just a way to bring enormous value to us all as a society. But I think what's interesting is both Nigeria and emerging markets in general and African markets in general face a different set of issues when it comes to the lack of data. And that's definitely a place where we can definitely start with building a business. You know, I think in terms of the entrepreneurs we interact with every day, that's really their sauce. That's how they make the magic happen. They take something that is an issue and find a solution to that. From our perspective at Seed Stars, because we support and invest in startups in 95 emerging markets, data and the lack thereof has been an issue for us. When we started 10 years ago, we wanted to identify the most high impact businesses in emerging markets, but we had to start from scratch gathering data about ecosystems and about the startups we were interacting with. First of all, we had to create what we call the Seed Stars Index, especially because data in that moment was a key to showcase the value and opportunities in the markets that we were working in. So we had to use data to explain to investors and partners and showcase the opportunities that were hidden in the markets that we were working in. So I think for businesses that we've interacted with and the business we want to work with, there is definitely an opportunity to leverage data. But my hope, actually, my personal hope and wish is that Nigeria can be at the forefront of building a more equitable digital economy based on the data that we are mining, and the new conversations around data that are going to be happening in the next years. I think to add to that, I know we were talking about data in particular, but I think I want to stress a lot, and I think we'll be talking about that, the sides of partnerships and the teams themselves building these startups. At Seed Stars, we look specifically for high impact businesses. So I tend to stress a lot the importance of the passion of the teams building these businesses and how much it matters that they care about the work they do. I think personally, and in terms of the work we do with Seed Stars, that's something I always want to stress.
Thank you, Alessia. And thanks for bringing up that final point on passion. on commitment, because that is a very critical factor in the sustainability of any business. If you are not committed to the cause, if you're not genuine about the cause, irrespective of the technology you put behind it, in a few years, in a few decades, you're not going to be on the landscape because it's not sustainable. Passion is something that's not usually mentioned, but I know that for growth that we are looking at in Africa, it is very important. Thank you. Now, we've talked before about the regulator, and considering the fact that the Nigerian exchange as the leading listing and trading venue in Africa, is the one that put together this conversation. Definitely, they are looking at how they can support this growth, support, companies to take advantage of the opportunity and the potential out there, and then Kola did trigger the conversation with regulator, and saying the regulator must be more collaborative, must be supportive of growth, coming early. Business models should, when we talk of business models, the regulator also needs to be flexible. So Dio, I would like you to speak about the role of the regulator, considering the fact that your role in SEC and the role of SEC generally in the ecosystem of capital markets. I would like you to speak about, the recent upheavals in the regulatory environment, and what would you say is the best approach? You're speaking from the regulator's perspective now, not from the investor, but what would you say is the best approach to build synergy between regulators and market operators like NGX, for collaborative innovation and advancement? Please speak to us.
Thank you very much, Remy. I hope everyone can hear me very clearly.
We can hear you loud and clear.
Okay, I think I've listened to many other people. I was almost sure that Kola had seen my notes when he was talking to me earlier. I was so nice sure he had seen my notes.
Nice one.
Because the major thing, he touched on something very, very important, which is the main message I have for everyone listening to us and all the other panelists, is stakeholder engagement. It's very critical. I heard it on the previous panel session as well. Now, I did mention in one of my engagements with one of the fintechs. Fintechs are innovative entrepreneurs seeking to provide solution to an existing problem, or to bring about the same product, leveraging technology. That's what it is. Now, they bring this solution to users, but there in the middle stands a regulator who is mandated to do some things. Fairness of the market or the operation, transparency, making sure everyone is accountable. So in all of this mix, you need critical stakeholder engagement. So on the regulatory side, so to be more direct, there are a couple of things that the SEC had done. Now, my conversation is not going to be on the defensive about what we have done. I think we should have a conversation about what should be done to increase or to foster the growth beyond what level we see that. And you mentioned that given the regulatory upheaval, I wouldn't agree. It's been an upheaval. To be honest, we are guided by laws, and we uphold laws and we create rules. And the reason, where there's no law, there's no sin. Do you get what I mean? Before innovation came, things were being done in a certain way. Now, if the rules are meant to change to suit the world new order, everybody needs to come around the table, have a clear understanding, so that you, the creator, the innovator, the end users, and even the regulators are well informed early enough into the discussion. It doesn't have to be early enough, even well enough into the discussion. So to create rules that everyone will play by, and so there's this issue of transparency, investor protection, and every other thing is taken care of ab initio. Now, over the last 2 years, I joined the Securities and Exchange Commission about 15 months ago, and I was in the private sector, in the capital market, actually, and that's what I've been doing for over 17 years before I came. Now, knowing what I know now, I think the key message I'd like to pass across to every other person, the fintechpreneurs and all of that, is this criticality of stakeholder engagement. Laws had been created, rules had been written based on an existing idea. You have come with this brilliant, life-changing, world-impacting, disruptive technology. Fantastic. Again, if new rules are not written to protect that disruptive and brilliant idea, it could be subject to abuse. Definitely. Once it's subject to abuse, remember, the Securities and Exchange Commission, for example, is not just, when you talk about investor protection, it is not just about the mom and pop that are just bringing $1 or a naira from the street. It's there to even protect you as a capital market, a potential capital market operator from abuse. I know there's been a lot of news and a lot of things that have been mentioned around Ponzi schemes. Ponzi schemes are not new. From the 1800s, they've been quite popular. But do you know what they say about a bad cook just spoils the broth? Yeah, we've been having brilliant ideas from, I don't want to mention names, some names have been mentioned here, about how they've been leveraging technology to unlock the huge potentials. And I'll give you one statistic, for example, in our collective investment industry. I think over the years, over the last 15 years, I think the total number we're struggling with is under 500,000, definitely 400,000 or thereabouts. 4 fintech platforms came together about maybe the oldest one, maybe 18 months or 2 years ago. Guess what? Amongst all of them, they have almost 600,000 users in just 2 years. You understand? So we see very clearly the potential fintechs and technology brings to the table. We see clearly, we are not obfuscated in any way. We are not confused. We are not even in a state of mirage about how well this could be done, on how we could leverage it to develop the economy, deepen our markets, and even engender more compliance with rules and regulation. I mean, everybody uses technology in every sphere. But the question is, you see, everything is, back in the days, Voltron, arms, legs, head, everything coming together. We need to be around the same table to forge ahead, or else we'll keep having frictions. I mean, take the example, if you're in a game of tennis, once you're serving, you expect the person at the other end to return the ball. And there's an umpire who is not part of the game, but is telling you about the rules of the game. So there's a fair play in everything. So that's the point, and that's where the SEC stands. I like the points that have, in fact, the discussion that have been had all morning makes my position a bit lighter, because I thought I was going to be firefighting and defending positions for everyone. But it just makes, I think I'll just leave it at critical stakeholder engagement and knowing that the regulators are partners in progress and jointly together understanding each other's ambits and mandates will help the entire process. I'll leave it here for now.
Thank you so much. And I love your examples of tennis and Voltron, although depending on the generation of people listening, they may not know, so maybe next time use Avengers. But that's great. And thank you. I mean, in summary, what you said, Dio, is the regulator is open and the regulation is for preservation, is for protection, and it is from a positive standpoint. So you are actually lending, an open arm here to the investors, to the market, saying we want to collaborate, we want to sit at the round table, invite us, speak with us, talk with us. We are flexible, we are not locked down, and that's great. Now, Andreas, considering that you are what F10 does in Switzerland, and with what F10 is currently doing, and also in your role in the head of 6 fintech ventures, right? I would like you to speak about how this translates from your own perspective, with respect to capital market supporting and sustaining growth in startups and in businesses and in economies. So, we've heard from the regulator, SEC, someone speak from the SEC perspective, which is an African regulator, right? But I believe with your interaction and your experience, you have maybe an international perspective to complement that view. So, Andreas, over to you. Please share your views on this.
Thanks very much. So it's great to be here. And first of all, thanks for the invitation. And it's extremely exciting to listen to all of you, what I've heard today, in this panel, the previous panel, and the speeches, because also I can learn a lot about Nigeria and your challenges and how you solve them. And, you know, what I immediately start to do is actually I start to compare, you know, what I have experienced here in Switzerland when we started 10 years ago with what we're doing here with startups, innovation, and so on, and also what we see in the meantime, you know, in Singapore, in Southeast Asia, as well as, you know, like in Spain, which is part of the European Union, which Switzerland is not, and this is a big difference. So I think we from F10, we really believe that innovation, especially also in the capital market space, is coming from innovative tech startups. It's not actually coming from the incumbents because, you know, the incumbents, they, you know, in their DNA, they have reliability, security, and stability, which is good, you know, because we need to have stable market environments. So we don't want to actually make sure that the, you know, like an exchange is changing things all the time. So that's why it's also very difficult for them to innovate. And our hypothesis is actually, you know, combining, you know, innovative startups, innovative tech startups with the incumbents. With that, you can really massively scale innovation, because, you know, what usually the small companies have is a problem, you know, to scale fast. And there I'm very much into what has been said before, that partnerships, you know, between all the stakeholders in the ecosystem is key, because with that you can actually massively scale things and can make things much faster. So for instance, like the Swiss Stock Exchange, where I'm managing the corporate venture fund, we started a program to actually, you know, get closer to innovative tech startups. And we scaled that program to Spain because SIX is also running the Spanish stock exchange. So that's makes pretty sense to generate those synergies there. And with that, you can actually get very close to these companies. So on one hand, you obviously also you know, help to actually foster innovation in a certain market. On the other hand, you also can benefit from the technology and from those innovations while you partner with them. So it's kind of a symbiosis between the two different worlds. And I think that model, I'm very convinced, you know, that model can be transferred to any other market as well. But it needs, and you know, this has been said very well by actually your regulator, is actually it needs that stakeholder engagement. So there needs to be willingness actually to sit together, because they're living in different two planets, right? When you talk to an early stage entrepreneur, I mean, yes, completely different challenges and problems, like an executive board member, you know, at the incumbent or a stock exchange. So somehow we need to make sure that these people are coming together and talk to each other. And when it's about kind of the regulator, this is also a very important aspect, I guess, because, you know, I think, you know, if you compare the industry we are in with any other industry, and you look at the innovation is happening in the other industry, I think one of the kind of major challenges we have here in the financial industry is actually that we still have to make sure that, you know, markets are operating in a fair way, that, you know, fraud is prevented, that you prevent anti-money laundering and these kind of things. So this is very special. So I think the entry barrier for companies creating a new business model and scale it in that industry is actually quite high, because you have to make sure that all these things are, you know, kind of properly covered. So I think there can be two different ways how a regulator is behaving. The one is actually just, you know, making sure that everyone sticks to everything which has been defined. So being more passive, right? Playing a little bit more the police role. So that's what we see in certain markets, and that's, you know, also probably one of the results why there is not much innovation happening there, right? They maintain the status quo. In other markets, and I think I must, you know, mention here Singapore, where the Monetary Authority of Singapore is doing a completely different approach. So there, actually, the regulator is somehow also playing the role of an innovation catalyst. So they basically provide a lot of support to companies to actually, you know, test out their business model, you know, scale the business model, but eventually also looking at how they can make sure that, you know, fraud is not happening, for instance. And that's a very interesting concept. And if I compare that to Switzerland a bit, you know, here in Switzerland, I think we don't have a regulator which is actually fostering innovation. But here, you know, he puts in a technology neutral regulatory framework in place, which I think is also a very interesting concept, because this allows also to test out certain things, right? And it also not regulating a specific technology in a very detailed way, because I think the regulator is also not in the position to really understand all the different, you know, aspects, because it's actually fast moving, and it's also not the, you know, his probably main task actually to understand all different things in the technology space. Okay. So that's another way how you can do it. And if you look a little bit, you know, what happens in Switzerland, you hear about the Crypto Valley, right? This is an ecosystem of crypto startups. You know, one can claim, well, there was a lot of things going on, unregulated stuff going on, but eventually also led to the fact that we have a first fully licensed and regulated digital asset exchange here in Switzerland with SDX, right? And I think the result of that license is actually, you know, also, you know, coming from the fact that we had so many blockchain startups coming to Switzerland. And they invested a lot of time and money into building up the capabilities. And then the regulator had the chance actually to understand things better. And they were able actually to put in a regulatory framework in place, which allowed actually at the end of the day also to actually start up an exchange, you know, where you can trade digital assets in a very regulated way. And this is not a crypto exchange, right? We're not talking about cryptocurrencies here. We're talking about stuff which is unbankable at the moment, and which in the future will be kind of, you know, a different market, you know. And I think that's also a concept which I'm very convinced can be easily transferred to other markets. And that's what we try to do also with F10, right? To connect the dots, to become a global network, to make sure that all the stakeholders are on the same platform. And it's very similar like to what NGX does here, you know, with the webinar, right? Bringing the right people together, make sure that there is open conversation between all these stakeholders.
Thank you so much, Andrea. You touched on a lot of things, you know, I mean, you talked of the symbiosis. I think that's very, very important. You know, the need for the synergy between early stage growth, matured, you know, businesses, capital markets, regulators, so that complete ecosystem, which just complements the conversations we've been having around the different factors, you know. Now, as we all know, every good thing must come to an end. An exciting conversation is coming to an end now, but we have a few questions that we're going to direct, you know, to some of us. So, caller, you know, we have a question from Thomas Brown, and he's asking, you know, does your organization provide core investment opportunities for foundations that have an SDG or, you know, an SDG impact? So, can you just give a response to that in about a minute? You know.
Yeah, yes, absolutely, we do. We co-invest very often with all kinds of organizations, and our thesis is actually aligned with the SDG. So I'll be happy to engage with that person.
Okay, fantastic. So thank you for that. Now, Chidima, based on your work with microtraction and your experience, will you consider the current regulations on fintech companies to be an enabler or a disincentive to new entrants? What's your view on that? That's a question from Godziniru.
I think this is a very controversial, very controversial one.
Sorry to put you on the hot seat.
And to be really honest, some of our portfolio companies have gone through quite a bit of hurdle with some of the regulatory from some of the regulations that have been put down upon them, the likes of the Bamboos of the world and the Shakas of the world, right? So I do think that there is currently, it feels like a hindrance. It is a hindrance to some of these companies, but I also know that the SEC and you know, CBN are willing to work with some of these companies. So it's just about making sure that the key stakeholders on our own end, the fintechs of the world and the startups of the world have a seat at the table, and that these discussions are happening more frequently, so that when these regulations come down, they come down in a friendly way that enables these companies to be able to grow. So and not hinder their progress as they're trying to essentially scale their businesses. And I think at the end of it, we all want the same thing. We want economic growth. And I believe that the fintechs of the world and some of these startups are innovative enough to help push for that economic growth for our country. And I do think that that is aligned as well with what our regulators want. It's just about, I think it's all about communication at the end of the day. So that is, I hope that I do not get in trouble with the regulator.
No, I don't think you're in any trouble. Thank you so much for sharing that very genuine perspective, and I believe now as things develop and evolve, we've seen this in the payment space, as things evolve, regulation, business growth, and all factors will align. It's a continuous thing of stakeholder engagement, roundtable discussions. So definitely, we are heading somewhere, and I think as we keep on developing these conversations, things will keep smoothing out. Fantastic. Now, Alessia, there's a question I think your experience can really help throw light on. And it's saying, what are your thoughts based on, what you've seen in your space? What are your thoughts on, remodeling, the opportunity to remodel economic measurements, for new and for a more competitive landscape in general? And in your view, do you see the capital market like NGX having any role to play in that?
Yeah, I was actually about to say, since we've been talking many times now about synergies and about communication, I would love to see the exchange be more and more involved in facilitating those conversations. I think you are in this great position in between the private and public sector. So, we are, I think we're looking forward to continuing these conversations all together, hopefully in person next time as well. But I think it's been great working with you in general. With SeedStars, we've been doing some work together with the exchange for a while now. And I think the best thing we can do as institutions to support the ecosystems is really to show that there is a system, that there is a support system for businesses, that there are opportunities to be taken, that there is space to try and fail. And I think, again, it is very important to showcase to foreign investors and partners what is happening in the ecosystem, because I think we need to brand Nigeria and Nigerian economies, and we need to make sure that on the international playground that people know what's happening, so that we can bring more investment, more opportunities to the local ecosystems. People I feel are always thrilled to hear what is happening in Nigeria in particular. So I think making sure that we build that foundation of trust, we've been talking about regulation and how things have been a little shaky. I think making sure that investors feel comfortable and safe in their investments would be a huge step to make sure that the next years are, they give the space to these thriving entrepreneurs to continue doing their work and create value for Nigeria and for the continent and for the world. So yes, let's continue these conversations. And
thank you. Thanks, Alessia, for shedding hope, the fact that indeed you do foresee a remodeling possible. And I think that's happening, that's already happening. And I think that's why NGX has put together this conversation. It's basically because they do foresee the opportunity for remodeling. They do foresee the opportunity for further collaboration, for the possibility of new models coming up, new opportunities coming up. And they definitely are, NGX is definitely positioned to be a platform for growth, a platform to sustain and support that growth in Nigeria and in Africa. We're very excited about that. We have come to the end of this panel, but we're going to, so we've been taking questions from the audience all this while, and so there is a question around funding for early startups, and I'll just answer that and say we have Microtraction here, we have SeedStars here, and we do have other, opportunities for platforms that support funding. So this is in response to the audience. Please engage on on Microtraction, SeedStars, and other platforms. There definitely is opportunity, bountiful array of opportunities for funding out there. So I'd like to end this with Dayo. Dayo, I'd like to drop the last balls. I'd like to stop it at your desk. And Dayo, I'll say just looking at the regulator, which we have been speaking a lot about, you know, and it's just to ask that, is it part of your strategy as a regulator to outsource some of the critical responsibilities of SEC to other players, and like CSCS, for example, and what could be done to insulate SEC from, you know, some, say, possible revenue income drive from the government in the future. So this is a question for Mohammed Waziri. It has some controversial sting to it, but let's see what you can do with that now. And that will take as the last question.
Okay, yeah, thank you very much. So I'll start with Chidima. Chidima, there's not going to be any trouble. All right, so we'll continue our conversations with all the fintechs as much as we can. I mean, we're even encouraging them to come into a group, so it will be easier to engage, as opposed to meeting people one day after the other and repeating the same message, or taking a tape recorder and just playing what I said yesterday to the other guy that shows up in my office. So the first question about whether we're going to outsource some of our critical functions to any party. What we are mandated to do is provided in law, and I don't think that's transferable. So I'll just leave it at that. We have a core mandate to develop, and I just think I'll just quickly drop this in the next 20 seconds.
Okay.
The SEC doesn't get claps for how many rules or how many businesses it stops. It gets claps for how many businesses we encourage to grow and thrive. Secondly, the SEC, wait, before you get so excited, the SEC doesn't now get claps for how many businesses alone just thrive at the expense of others. So we are the main person saddled with the responsibility of going after that one proverbial lost sheep. So I'll just leave it at that. So our mandate is very clear, and I don't think we're going to be, not that I don't think, I know for sure, we're not going to be ceding that out to the critical ones. There are opportunities to collaborate with every other person. We understand the language. I mean, we're in government and we interface directly with the private sector. So we understand clearly the power and the strength synergy and partnership brings about. Now, the second one about how we are going to insulate ourselves from the drive, the revenue drive of the government. It's a government agency, so I'm part of government. So I can't, cut the umbilical cord to my parents. So, but that's definitely, okay. Yeah. So we just keep doing what we do and protect the market, making sure everyone, it's a fair market for all providers, as the capital market operators and the investors. I think I'll just leave it here.
Greatly said, and I mean, the audience agrees with you. Very well said, very diplomatic. Now, on behalf of NGX, I'd like to thank all my panelists for this vibrant conversation. I'd like to thank all of us for being able to handle even some controversial points that came up and still be able to divulge relevant information that people can carry on. And to the audience, I know all questions were not answered. We have questions in the chat. I can see Andrea is responding to some questions in the chat, so we're going to do that as much as possible. We'll keep the questions on social media, and definitely you will get responses. And so thank you, everyone. That's a wrap on our session. Thank you, and I'll hand back over to Boston. Thank you so much. Bye-bye.
Thank you so much. Thank you so much, Oremi, and the rest of your wonderful team. I'm finding it very difficult right now to weigh between the first panel and the second panel, but it's very fiery and emotional and quite informative and educative in particular. I just got to let you folks know, folks in the fintech space know that, look, the SEC, the regulators want you around because there's a little fee attached to coming to the marketplace. And the SEC is not going to lose that. So tie your asses eyes, as well as you good Alamido, the Director General, that the more the merrier. I said this before, and I'm sure Temiko Kuala and the rest of his team are just looking at all of you and say, look, if we have these hundreds of tech startups come to list as issue on the market, they're looking at the listing fees and a few other things, even though they're going to adjust the books and make it happy. But there's no free lunch, by the way. So let me just tell all of you, Remy and Andrea, Chidima, and all of you, please come to the market street, the platform the NGX provides, but there's a little fee that will make everybody happy. So regulation is to ensure that everybody smiles at the end of the day. And I'm sure on the side of the SEC, the NGX, and everybody else, it's going to be a whole lot merrier. Again, if we do this, gentlemen, and we talk about the NASDAQ, for example, that's a market which is well regulated. So if we build Nigeria's version of NASDAQ, is to the glory of Nigeria, and it will boost the economy, has been said. And I picked that from what Chidema says, that we all want the same thing. We want an economy that leverages innovation and technology. And if you guys are bringing it to the market, the more the merrier, the better. If we get a international financial center done where Andres and Alesia and Microtraction and Flutter Wave dominate, and we build our own technology city on the Atlantic, just a little from where I am here handling this conference today. Look, it's going to be the best for Nigeria. So the more the merrier, the better for everyone. Regulation, innovation has a meeting point, and that's what this conference is all about. And thank you once again, Nigerian Exchange Limited, for organizing this. I think we should be having this perhaps on a quarterly basis moving forward. And I'm just suggesting that we have this on a quarterly basis so that before issues get out of hand, we have a platform in which we sort them out and talk and judge and get the best of each other. Thank you so much. Let me hand over to Tosin Bredugo, who is the head technology support at the Ngx Limited, to wrap this very insightful 2.5 hours to a close. Doctor, please, let's have you speak to us. Oh, okay, I guess I'm getting Dr. Femi Yenuga here, the Chief Digital Officer, is likely going to be taking that from me. You have the floor, please.
Thanks, Hussein, and I'm quite honored to be delivering the closing remark of this insightful Technovation conference, where I actually extend vote of thanks. This inaugural Ngx Innovation Conference 2021, which would always is going to be, I think it's been a resounding success, and it's going to be a continuum, as this is the flagship that we're doing. And I take you, Bozian, you're actually peeping into my closing remarks, because this is meant to be a quarterly type of presentation from the exchange. So thank you very much. We've had very rich diversity in terms of business discussion from technology leaders, very insightful, looking at all the 3 pillars of the team of the conference: technology, platform, and the market, and the intersect, creating enabling opportunities for Nigeria. But I want to paint the conclusion over 5 backdrops. How do we create business models that drives value from a competitive landscape and solves a problem? Topsy mentioned that very well as GB saying, how do we bring collaboration between founders and regulators, because they are the tech movers? And then how do we democratize technology for Nigeria to create innovative solutions within the capital market, and also create capital formulation that enables the country that has over 91% growth of the bracket in the millennial segment. And based on where the country is going, a lot of technovate and fintech evolution still waiting for us to harness. So how do we democratize that? And then how do we create a return on investment as well to the nation, as Nigeria benefits from this, and then enhance flexibility? I remember the discussion in panel 1 where Olumide painted it quite well, saying we should make the process easier. How do we group for technology listings on the exchange? And then the second panel also tipped around data as a digital fulcrum for economic growth, and data is the new oil. I kind of like the opening statement from the DG of SEC, saying that technology innovation must be a responsible one, leading by integrity. And I did mention a very important component as well as engagement throughout the entire ecosystem. So in closing, I like to say that today's session is the beginning of many engagements to come within technology leaders across the nation, showcasing the interplay of what we can do to drive technology innovation and digital platform. I kind of want to close based on what Andrea has said around the experiences from Switzerland and Singapore. A lot of plethora of information there in terms of collaborativeness in what the future trends would help to drive from a capital market evolution, blockchain, big data, artificial intelligence, and cloud imperative as well. And I want to close on this note from John F. Kennedy that says, the change is actually a law of life. How do we ensure that we are part of that law of life as we pivot into the past, present, and then we don't miss the future? Thank you very much. It's been nice having everybody here.
Thank you so much, Dr. Lufemi Oyenuga. Thank you very much for summing it up very nicely for us, the Chief Digital Officer at Ngx Limited. Thank you very much. I can't thank you enough. The rest of your team, of course, the CEO of Nigerian Exchange Limited, Temikukwala, leading this particular engagement and making it happen from the C-suite all the way down to every member of the team. And of course, our speakers today, let me say thank you once again very quickly to the head of the SEC, Lamido Yuguda, and his team, who are also part of this all through the conversation. Those very distinguished speakers, we have Dr. Shegwaina, who's the president of the Africa FinTech Network, the co-founder and CEO at Flutter. Andrea, thank you very much for your team. Alessia, Dayo Bison, those of who are panelists who have done very wonderfully well today, making this event happen. And as the closing remark says, this is going to be a quarterly event. So keep your eye on this. We'll see when this will happen, perhaps before the end of the year, or kicking off the new year, 2022. And I hope to be here with all of you once again. On behalf of the Nigerian Exchange Limited, thank you for an insightful conversation. For those who are registered online, the Nigerian Exchange Limited team will make sure that you get some of the presentations in your email box as you've got them before the event. So keep the conversation going, continue to engage on this platform and with the Nigerian Exchange Limited. Thank you very much, everyone. I am Boston Omofayo from Frontier Africa Reports.